So appreciate everyone's time. It's always an honor to speak to the University of Arizona. As I think the email mentioned, I'm a class of 2006 Wildcat, studied economics, met my wife there, two little boys. We have season tickets to basketball games still, make it down to Tucson on a regular basis. And I love watching the innovation and opportunities that University of Arizona is extending to entrepreneurs like yourselves. And I think the program that everyone here is going through is fantastic. It's going to make dividends in your ability to succeed and grow in tremendous ways. So I'm excited to talk about the most boring piece of your business, I'm sure, which is insurance. I'm assuming most entrepreneurs I work with as they're starting out, they think of insurance as something that they have to buy. They know it protects them, but at the end of the day, they don't really know what they're having to pay for. And my firm, Lovett Touche, we are about over 100-year-old insurance brokerage. We were acquired by Marsh & McLennan, which is the largest insurance brokerage in the world, about 3 years ago. So we handle everything from employee benefits to property and casualty, which is what you typically have to buy as a startup. You have to buy general liability, property, workers' comp if you have more than a few employees, Scott. My particular focus is in the directors and officers piece, and where the value I bring to companies like yourselves from startup all the way to IPO and post-IPO is I protect the assets and the indemnification of the officers themselves, the entrepreneurs, the executives that the entrepreneurs will hire to lead the teams and the organizations, as well as the boards. And I think as you walk through the life cycle of your organization, you'll see how important it is to be able to attract, retain, and bring in the most ideal candidates from an executive and board position. And the D&O is integral from both the startup to as you continue to raise funds from Series A, seed, all the way to the growth stage seeds, all the way to IPO, SPAC, whatever it is you may be looking to do. And the main things I wanted to cover are what is D&O? What does it cover? What are the actual risks, and why do you need D&O? Because a lot of organizations, until they're even thinking about taking on large sums of capital, or they're looking to go public, they typically don't buy it because it is an expensive risk to insure. If anyone has questions where I'm going fast, I know insurance is a lingo that can be difficult to follow if I'm using acronyms or speaking in terms, but D&O stands for directors and officers. It covers boards, executives, and entrepreneurs like yourselves. Let me move this along. So D&O insurance coverage intended to protect individuals from personal losses if they are sued as a result of serving as a director or officer or a business or other type of organization. It also covers legal fees and other costs the organization may incur in result of such a suit. So as you grow and you take on capital, you have investors, and say the business doesn't go as planned, and you have investors that want to recoup some of the money that they invested, they could potentially sue you. And so this insurance policy would kick in place both for your own personal indemnification, the indemnification of the organization, but also pay for legal fees, which can add up fairly quickly. And even on some of the smaller businesses on Series B, C funding, I had a client receive $75 million from one of the largest venture capital groups in the world. And they were based in Tucson, actually. They went out of business because the venture capital group pulled funds, and there was several D&O lawsuits. And luckily, there was $5 million of coverage. They blew through that $5 million within 6 months. So it just gives you a little bit of how quickly that insurance layer that you're purchasing could be exceeded with a pretty contentious litigation environment. There's 3 insuring clauses. So when you talk about insurance, what does insurance cover? D&O has 3 pieces. At the stage that you all are in, side A and side B are really what matters. Side C, I typically consider publicly traded company. As you grow, it extends coverage for the corporate entity itself. For what you care about as an entrepreneur, side A covers the claims where the company refuses to or is financially unable to pay for indemnification. I call this the college savings account and the home coverage. You as the entrepreneur are running a business. You're taking capital from other organizations, third parties, investors. They have an expectation, and you have an obligation to maintain sets of standards, controls, disclosures of your revenues, your IP, your technology, whatever it may be. And if you misrepresent or things go sideways, there's an opportunity for litigation, and your own personal assets come into play. Side A is very important. The value of side A coverage, and I guess I should take a step back. A lot of insurances have deductibles, like your auto insurance has a deductible. Commercial insurance has deductibles. Side A is different. It pays the first dollar. You are not going to pay $1 out of your personal pocket if you have side A claims or litigation that comes after your own personal assets when the corporation or your business entity doesn't have the capital to meet the obligations of the suit and the settlement. Side B is the other indemnification clause that covers losses for directors and officers when the company does grant indemnification. So if the company says you're operating under our control, we understand, we have this covered, it is in our realm to pay the coverage for. So those are the most important pieces. And again, side C covers the corporate entity itself. And that typically I see comes out of the larger growth when you're later in stage. And I'd happy to walk through what those claims look like. But for the purpose of today, and knowing that we have limited time, and I do want to give everyone time for questions, these are the type of claim scenarios that I felt may be relevant to you, the entrepreneur in the center of innovation. Wrongful acts, a violation of statute, a conflict of interest, fraudulent financial statements. So you are an executive or you bring on a board member and there may be a conflict of interest within his own personal investments that may be competitive or utilized as a subcontractor or a vendor. Those type of litigations could come back and it could not be, you may not be aware of it. The board member or the executive within your organization may not have been aware of that conflict of interest. But as many of you may know or have heard in legal world, not knowing is not an excuse or a reason to decline or let a suit get resolved without precedent. Improper management suits. Management can be sued for improper management of company finances. So you start on a spending spree, you're buying office furniture, you're growing, you get your first round of capital, and you had a lot of benchmarks that you were communicated to your investment team or your group of investors, and you overspent in certain areas. There could be potential litigation or indemnification held by the organization as well as the decision makers within your executive team and board that allowed and did not express the proper due diligence and obligation to your investors or other third parties that may have a reason to file suit. Errors in judgment. It looks like I have a spelling error there, so excuse me. We all have errors in judgment and mess up sometimes. Overstating a product or technology's effectiveness. I don't know if this one applies. There's a big entrepreneur here in town that has an electric vehicle, and the CEO made some representations on social media. I don't want to say names, but he was held accountable and was removed from his position because he overstated that product's capability. As research came out, the truck was positioned on a hill, and it was demonstrated as if the truck was fully capable of performing that maneuver at that speed at that time, which was a false narrative, and he was eventually sued, removed from his position, company had to settle. And then negligence of duties. So undiscovered and prolonged employee embezzlement is one I could see at a startup where you don't have the financial controls. You may not have a CFO or a controller in place, and you have a lot of money moving at a very rapid rate as you're growing. And if you have prolonged issues where you have employees continually siphoning off and it goes for a prolonged amount of time undiscovered, you could potentially be held liable. So I think these are kind of the key risks that D&O insures. And as entrepreneurs, you're going to have the option. You're going to need to make a budget from the funds that you get to grow your business. And you're going to need to make sure that insurance, which in most entrepreneurs and business leaders' eyes is a sunk cost. You're spending hundreds of thousands of dollars for 5 to 10 years before your business is operational. And you spend that every year. And you're never going to see a benefit outside of workers' comp claims or small things that aren't really going to affect your bottom line. But D&O could destroy your company if you have large suits. It could brand recognition, executive, reputational harm. It's important, and that's why I wanted to speak to you guys today, because as you're growing, there's nothing more difficult to overcome than having the company, the brand, the reputation, all of that get brought into a suit, and you don't have the proper cash flow to defend and fight against a fraudulent claim, or even if it's a justified claim. You want to make sure that your costs, your reputation are all controlled and in a manner that you have the backing of an insurance company that has the experience and has done it before, and a partner like my firm, where we do help and assist in the negotiation and discussion. So why does your business need D&O? Again, it's vital to protect business leaders, executives, and board of directors in growing companies. One item I didn't have in the slide is diversity, equity, and inclusion. Again, you want to attract the best and the brightest, but you also want to make sure that you're bringing in a group of individuals for both the board of that team that brings different and diverse thought process, backgrounds. Because as you go public, if you grow and if you have the opportunity to go public, there are several groups that will go after and sue publicly traded boards that do not meet the DE&I requirements in certain areas and certain industries. And you're going to see that coming now. And in my world, we're seeing organizations have premiums that are much higher, or declinations of carriers offering to offer terms to companies if they don't meet certain DE&I requirements within the board. It's a very important piece. I can talk DE&I, diversity, equity, and inclusion, if you aren't aware of what that acronym stands for. Bring in different individuals from different backgrounds, different thought processes is the strategy that we see a lot of my clients that are in venture capital, private equity-backed organizations like yourselves. Adequate D&O limits are important. So as you grow your board and you bring in an experienced and knowledgeable board member, they're going to want to see how much insurance you buy. So limits are going to be a point of contention. Someone like myself can help you quantify, consult, and also engage on board prospects. I talk to board prospects for my clients all of the time, walking them through the insurance carrier, the coverage, what it is that they're buying. And again, most people want to see the side A, which is the personal asset protection as you're growing the board. D&O is often required on receiving investments from venture capital, private equity, and even private investors. I see that a lot, where before the cash is deployed, they want to see a certain level of purchase of D&O. Cyber is another one that we're starting to see fall into the negotiation and due diligence prior to the release of funds. It protects your assets, the investors, colleagues, and board of directors. Again, no one wants to lose their own personal assets. You're building a lot of your personal equity into your business. You're still going to grow that equity in your personal assets as well. You're going to protect the assets in the business through all of the other different insurance controls. Do the same for your personal assets. And I think everyone can watch the news and know the world is pretty litigious. You're an entrepreneur. You have an obligation to the time you put into the business, the balance sheet of the company. Insurance and properly insuring and understanding the risk and making an educated decision is obviously an obligation that you carry to everyone that you do business with, invest in you, and you hire. But that's really all I've got. I'll